Another day, another story about the basics of Forex. Hello everyone and welcome to our channel. Today, we are going to talk about Forex, which stands for foreign exchange. Forex trading is the buying and selling of currencies from all around the world. The Forex market is the largest and most liquid financial market in the world, with trillions of dollars traded daily. Before we get started, I want to make it clear that Forex trading is not a get-rich-quick scheme. It requires time, dedication, and a lot of hard work. However, if you do it right, Forex trading can be a profitable venture. So, let's dive into the basics of Forex trading. The Forex market is open 24 hours a day, 5 days a week, which means you can trade anytime you want. It is also accessible to anyone with an internet connection, making it an attractive option for traders all around the world. When you trade Forex, you are essentially exchanging one currency for another, with the hope of making a profit. For example, if you believe that the value of the euro will increase compared to the US dollar, you would buy euros and sell US dollars. The value of currencies fluctuates based on various economic and political factors, such as inflation, interest rates, and government policies. Traders use various strategies to analyze these factors and make informed trading decisions. Now, let's talk about the different types of Forex traders. First, we have the retail traders, who are individuals trading from their own accounts. They make up the majority of the Forex market and usually trade through a broker. Second, we have institutional traders, such as banks and hedge funds, who trade on behalf of their clients. They have access to more resources and information, which can give them an advantage in the market. Third, we have the central banks, which play a significant role in the Forex market. They can influence the value of their currency by adjusting interest rates and implementing other monetary policies. Now, let's talk about the risks and rewards of Forex trading. Like any investment, Forex trading comes with risks. The market is highly volatile and unpredictable, which means that traders can experience significant losses if they are not careful. However, Forex trading also comes with the potential for significant rewards. With the right strategy and a bit of luck, traders can make substantial profits in a short amount of time. Before we wrap up, I want to give you some tips for getting started in Forex trading. First, do your research. Read books, watch videos, and attend seminars to learn as much as you can about Forex trading. Second, choose a reputable broker. Look for a broker that is regulated and has a good reputation in the industry. Third, start small. Don't invest more than you can afford to lose, and gradually increase your investment as you become more experienced. Fourth, develop a trading plan. This should include your goals, your strategy, and your risk management plan. And that's it for today's video. I hope you found this introduction to Forex trading helpful. Remember, Forex trading is not a get-rich-quick scheme, but with the right approach and a bit of luck, it can be a profitable venture. Thank you for watching, and I'll see you in the next video.